Let's be real for a second. Palantir stock has absolutely skyrocketed in 2024, gaining a jaw-dropping 170%. That is not just a little bump. That is a massive leap that has investors everywhere buzzing with excitement. But here's the million-dollar question. Should you jump in now? Or is it too late to buy? I get it. You're probably feeling a little conflicted. On one hand, you don't want to miss out on this incredible opportunity. On the other, you might be thinking, wait a minute, it's already up 170%. Is the train about to leave the station? Well, you're not alone in that thought. In today's video on the Wealth Wisdom, we're diving deep into whether Palantir's recent surge is sustainable, or if it is a bubble ready to pop. We're going to break it all down, from the fundamentals of Palantir's business model to the factors that caused this spike, and what the experts are saying about its future. You're probably hearing conflicting opinions everywhere. Some people are calling it the next big thing, while others think this rally is completely overhyped. That is why I am here, to give you the information you need to make a sound decision without the noise. By the end of this video, you'll have a much clearer picture of whether Palantir is the right pick for your portfolio, or a stock better watched from the sidelines. Palantir Technologies, ticker symbol PLTR, has been on an absolute tear in 2024, with its stock price soaring over 170% since January. Investors are clearly feeling confident about the company's artificial intelligence software, which has been driving this massive surge. In fact, Palantir is now one of the top performers in the entire S&P 500 this year, ranking as the third best stock so far. Only Vistra and Nvidia have delivered better returns. But with such an explosive rise, many investors are asking whether this is just the beginning or the peak. Not everyone on Wall Street is convinced. Out of the 23 analysts tracking Palantir, the median price target sits at just $28 per share. That represents a potential 40% drop from its current trading price around $47. Since this is the median, it means half of these analysts expect even steeper declines. So while some investors are betting big on Palantir's future, others see serious risk ahead. Palantir has firmly established itself as a leader in artificial intelligence platforms. The company specializes in big data analytics, offering powerful tools like Foundry and Gotham. These platforms help organizations collect, integrate, and analyze massive volumes of data while building their own machine learning models. What truly sets Palantir apart is its AIP product, which adds natural language processing to both Foundry and Gotham. This allows users to interact with data using advanced language models, similar to those behind AI chatbots, making decision-making faster and smarter. Palantir's software uses an ontology-based system, a digital map that mirrors the real world and shows how data points connect. This unique structure allows users to explore complex datasets and build custom applications with ease, giving Palantir a major competitive edge. Industry recognition supports this advantage. Palantir's AIP earned the highest score for current capabilities among competitors, with analysts noting that the company is quietly becoming one of the most powerful players in the AI space. Further validation came from Dresner Advisory Services, which named Palantir a top vendor. Into major market studies, one focused on AI data science and machine learning, and the other on model operations, which covers the full life cycle of AI models. Palantir's financial performance has been equally impressive. In its third quarter earnings report, the company exceeded expectations across the board. Its customer base grew by 39% to 629 customers, while existing customers increased spending by 18%. This drove a 30% year-over-year revenue increase to $726 million, marking the fifth consecutive quarter of sequential growth. Non-GAAP earnings jumped 43%, reaching 10 cents per diluted share. Looking ahead, AI platform sales are expected to grow at an annual rate of 41% through 2028, according to IDC. This trend should continue fueling demand for Palantir's AIP product. However, strong business performance does not automatically make a stock a good buy. Palantir's valuation is extremely stretched. Wall Street expects adjusted earnings to grow by just 17% over the next year. Yet the stock trades at roughly 133 times earnings. This results in a PEG ratio of 7.8, far above what's typically considered reasonable. For context, a PEG ratio above 2 is already viewed as expensive. A ratio near 8 raises serious concerns about overvaluation. Given Wall Street's median price target of $28, a meaningful pullback is entirely possible. For potential buyers, patience may be the smarter move. For current shareholders, trimming positions to lock in profits could be worth considering. That said, momentum stocks can remain irrational longer than expected. If Palantir continues climbing after you reduce exposure, that's simply part of disciplined investing. So, what's the bottom line? Palantir has delivered exceptional growth in 2024, powered by AI and data analytics. But at today's sky-high valuation, the stock appears priced for perfection, with analysts warning of downside risk. A cautious approach makes sense, whether you're considering Palantir for the first time or already holding shares. Weighing risk versus reward is crucial. Sometimes, the smartest investment decision is knowing when to step back and wait. Thanks for watching the Wealth Wisdom. If you found this video valuable, like, subscribe, and share your thoughts in the comments. We'll continue tracking Palantir closely, and I'll see you in the next video.